Okay, hi there. So, welcome to a video on budgeting. I would like to start with an introduction video, and then in the subsequent videos that I would post, I would go into a bit more detail. Right. So, let's start with what a budget is. So, we say budget is a plan, right? A budget is a plan expressed in monetary terms. Sorry about my bad writing. I'm actually using my phone to do this, so I apologize if the writing looks a bit bad. Yes, so we say a budget is a plan expressed in monetary terms, right? Now, the emphasis here is monetary terms. Now, once you hear monetary terms, you should expect that we'll be dealing with figures, right? So, a budget is essentially going to be dealing with figures. Okay, so it's as simple as that. It's a plan expressed in monetary terms. So, whatever plan you have in theory or on paper or in mind, you essentially are going to translate it into monetary terms. So they're essentially saying that you are going to have it expressed in terms of figures, right? Because money has to do with figures, right? Now, what we need to do, or what we need to know is that we have a budget preparation process. Okay, we have a budget preparation process. For this budget preparation process, we say that we start from somewhere and end somewhere, because that's the purpose of having a process, right? We start from maybe step one, end at step three, four, five, and so on, right? So it's a process. That's to say that we don't start from anywhere. We don't just say we want to start by doing C instead of doing A, right? We don't say so. It means that it's going to have some sort of logical sequence. So A from A, we move to B, we move to C, we move to D, right? So that's to say that we don't say, since it's a process, we don't start from C and then if we like, we can move to A, D, and then whatever we want to do, we just do it, right? That's not the purpose of this. So it is a process because we need to move from one stage to the other in trying to prepare our budgets, right? So where do we start from? That's the question to ask. We start from identifying, sorry, so we first start by identifying, identifying the principal budget factor, right? Start by identifying the can't spell, principal budget, principal budget factor. Okay. Oh, wow. Sorry about that. So the principal budget factor. Okay. Yeah. So we say that we start our budget by okay. We start preparing our budget by identifying the principal budget factor. Now, what is a principal budget factor? Right. Before I even go there, let me give you another name for the principal budget factor. Another name for the principal budget factor is the limiting factor. So just in case you didn't understand what I meant by the principal budget factor, maybe by saying limiting factor, it's going to give you a clue, right? Limiting factor, it sort of limits us, right? So what we say is that in trying to prepare our budget, we start by identifying our principal budget factor or our limiting factor. Now, this limiting factor, we say, is any factor that restricts the performance of the organization for a given period. Okay, the principal budget factor or the limiting factor limits or restricts the performance of the organization for a given period. Another way to put this is to say that it sort of prevents us or the organization from achieving its objectives, right? So one of the main objectives of our organization is to achieve sorry is to make profits, right? Is to make profits, right? So let's say for instance our objective is to make profits. Now, question is, what type of organization are we? For the purposes of budgeting, right, we are going to make an assumption. And now the assumption we are going to start with is that these budgets are based on a retail organization, right? Are based on the operations of a retail organizations. What do retail organizations do? Some of retail organizations, what they do is to buy and sell, right? Again, we can also say that these budgets are based on manufacturing organizations. What we essentially want to say is that these budgets are based on organizations that produce, buy and sell. What do we buy? We buy materials to produce, and we eventually end up selling, right? So we buy 20 kilograms of an item or material. We then use it to produce a unit, right? And then finally, we are able to sell those units, right? So what am I saying? We I mean we buy, right? Or let me use the word purchase. We purchase units of material. Sorry, we purchase, right? So we purchase, right? We produce, and then we sell. Now, don't forget that our objective as a manufacturing organization or retail organization is to sell, right? Is to sell goods and services. Now, I'm sorry, not to sell though as our main objective. Our objective is to make profits, right? Our objective is to make profits, and the profits we need to make will be dependent on something. So, question is, if our objective is to make profits, the profits you see here, right? If our objective is to make these profits, what then is going to be our limiting factor, or what then is going to be our principal budget factor, right? We can say that. I don't know if you have anything in mind. You can say it. Then I may not hear you say it, but then you can give it. You can try to guess what it is, right? Don't forget, I'm saying the limiting factor sort of limits us or restricts us the organization from performing, right, to its optimal or maximum capacity. In other words, we can say that they also sort of restrict us from achieving our objectives. And I want to look at it from the angle of the objectives, right? So I'm saying that the objective is to make profits as a retail or manufacturing organization that's into is into goods, mainly goods, right? Not into services. Don't forget that, right? So in order to achieve our objective of making profits, what do you think could limit or restrict us from achieving such an objective, right? Now, what can restrict us is our sales. Why? Because once we make lesser sales, it's essentially going to mean that we make lesser profits. Once we make more sales, it's essentially going to mean that we make a higher profits, right? So I think maybe I should put this objective right. Maybe our objective is to maximize profit, because once I say profits, it's subjective, right? So to maximize, profits, right? So once we want to maximize profits, or to sort of get the highest amount of profit we can have within the market, we need to make more sales, right? So in budgeting, that's to say that on the assumption that we are dealing with a retail or manufacturing organization, our main objective would be to make profits, right? To maximize profits, to put it rightly. But then, what would be the limiting factor to this objective? Or what is the principal budget factor to this objective? In other words, what would limit us from achieving this objective? And then it's sales. We say sales. Not just sales, because sales, what do I mean by sales, right? So we know with sales is our quantity times the amount, right? So that's essentially what it means. But we are mostly interested in the quantity, because once we sell more units of the product, we are going to make more profits, right? So having said that, what's the next step in our budgeting process? Right? We say that we prepare the functional budgets. So that takes us to step 2. Right? So for step 2, we say that we prepare our functional budgets. Question is, what is the functional budget? Or what are our functional budgets? So that's step 2, being our functional budget. Okay. Now we describe the functional budget as the budgets for various departments and functions of the organization, right? So these are budgets for the various departments. Now, so for let's ask ourselves that for a manufacturing organization, right? What are some of the departments we may have, right? Don't forget, would surely have a sales department. Okay, would have a production department, would have a purchases department, right? These are main departments would usually see in such organizations, right? So in preparing our budgets, we need budgets from all these departments, from the sales department, from the production department, from the purchases department, right? From the maybe labor departments, right? Among there are so many of them, right? Now we say that there are budgets from the various departments, right? That's to say that we are going to have, in as much as we would have a sales department, a production department, or a purchase department, that's to say that we would also have a sales budget, a production budget, a purchase budget, and then among others, right? Would have so many of them. Would have so as much departments as we have, we are going to have budgets for them. But as you realize, we need to be circumspect in doing this, right? So we'll surely have budgets for the relevant departments, right? So, an example of functional budget is a sales budget, your production budget, your purchases budget. Okay. Now, once we prepare our functional budgets, right, we would go on to to submit the functional budgets to the to the budget committee for review and approval. Sorry about that. So we would go on to submit the functional budget to the budget committee for the review and approval of it. So I would not like to write that as a step because for purposes of what I'm trying to do, right? So we are done with step 1, step 2, and now step 3, right? We go on to prepare the master budgets. Master budgets. Okay. So what's the master budget? The master budget is sort of your consolidation of all the functional budgets. Okay, of all the functional and supporting budgets. So it's as part of our functional budgets, we are going to have. I don't know if I should write this, but we are going to have the budgeted operating statement, which is essentially the budgeted profit or loss statement, right? And then we may have a budgeted statement of financial position, right? Now, one key thing to know, so let me write this in an abbreviated form. So you're going to have the budgeted operating statement or the budgeted statement of profit and loss or loss, okay, and then we would finally have the budgeted statement of financial position. Okay, so this is a consolidation of the functional budgets. In subsequent videos, I'll explain how we do this, including how to prepare the various functional budgets. Okay, so once you are done with this, we submit the master budgets and supporting budgets to the board of directors for approval, and then we then communicate a detailed budget. We communicate these detailed budgets to managers responsible for implementation, and finally, we monitor the actual performance with the budgets when that happens. Okay, so basically, I'm interested in these 3 because that's going to be what I'll be discussing on, right? So, for a quick recap, we said our budget is a plan expressed in monetary terms. For that reason, budget is mainly going to do with figures. I've explained extensively what the principal budget factor or limiting factor is. Once we get that, we go on to prepare our functional budgets, and then finally prepare our master budgets. Okay, so continue in the subsequent videos that I'll post.